It is Tuesday, November 6, 2012. It's election day. Let's see what the markets have for us. First up, a big rally. We usually see that on the day of an election. Dow up 133 points, up 1%. We're up 0.8% on the S&P. NASDAQ up 0.4%. Russell's up 0.74%. Banks up nicely, 1.27%. VIX down, more than 5%. Down below 18 now. Commodities doing exceptionally well. Gold up 1.9%. Silver up almost 3%. We do hit 3% on U.S. or crude oil. U.S. dollar down just a fraction. Trend very low, extended to the low side. Let me show you this. A lot of you are watching this well into the future. I know this to be a fact because I did my research now going back many years looking for what the stock market does after stock election. After the day of elections, what you have here is my research. Now, for 2012, November 7th, that'll be tomorrow, we do not know if we're going to have an up day or a down day in the markets. And we don't know if we will be Republican or Democrat. But what I can tell you is this. Going back here, last 10 times, we've only been green 2 of the 10 on the day after the presidential election. You can see here, here's some stats. Let me break it down for you. 8 out of 10 days after. So 80% of the days after a presidential election, the stock market has been bearish. That's going back only the last 10 times. You can see that we go back to 1968. 2 days after the election have been bullish. So you'll see 2 days have been bullish, and that's been split, 1 Republican, 1 Democrat. And then you'll see here that 4 out of 10 or 40% Democrats have been elected president, and then 6 out of 10 Republicans have been elected president. So, that being said, with this, most of the time, the day after election has been bearish, and leading up to election has been bullish. So, let's see what happens tomorrow. Now, taking a look here at the markets as a whole, what you have is a triangle taking place, but you have a support level right here. And let me show you where this line's drawn so you can get those corrected on yours. This goes back here to around June 4th, 2012. Going higher here, you can see support. We're trying to rally past that support area. The problem is we are below the 20 and 50-day moving average. The other problem is, look at the 20 and 50-day moving average. They have crossed over. Furthermore, if I go over here to the MACD, you'll see that we are below the 0 line. That's bad news. It's a good place to see a reversal happen and a drop take place. Now we do have a little pop here. However, statistically speaking, the next day after election, have a better chance of a drop. Now, with that, we are below the 20 and 50-day moving averages, and we cannot seem to get ourselves off this lower trend line. And we found resistance here coming across. You can see we hung up in this area. We found support on this line. We did get past the line, blasted back through it. You can see we hung up there again, resistance here, and sure enough, resistance yet again on Tuesday. And we pulled back from that. So the question is, will we drop, and will we go below this lower trend line? If so, that's bad news, gang. If that happens, look for a significant fall. It could be a sizable one. If you look here at the weekly chart, we've been talking about this, we have a decent chance of a rally taking place. We've got a nice bull pullback, a rising 20-week moving average. Nice bounce should happen here. However, you can see we have a bearish divergence on the MACD. And you can see that we're starting to go sub-zero on the MACD histogram. So with this, shows relative weakness even with a bullish formation. Now, if you go more macro, look at this trend line and this trend line coming higher, you'll see that these two trend lines are converging onto each other, and they do meet. With that, that gives us a rising wedge. That rising wedge is in fact more bearish than it is bullish, and you can go to our chart school to see. Remember, you want to go to our website. We give you the very best of technical analysis and give you the very latest of technical analysis on the broad markets as a whole. You certainly want to stay abreast to what we're doing here. Now, to give you some more statistics, we have users and viewers coming from over 155 countries. Thank you. And the average demographic are those individuals that are 25 years of age to 55. And we do have outliers that are younger and older than that. And we have 85% male, 15% of you are female that come to our website. And we know that most of you are college educated or have some college and are middle to upper management in your jobs, if not business owners. And we also know that many of you are pilots or have jobs that are being engineers or engineer type jobs, and many of you are left-handed. So that's some facts about those that come and be a part here. And as of just a couple days ago, we hit 1,000 users likes on Facebook, and we thank you for that. So with that said, I'm going to sign off. Thank you for being a part, and I hope one day you join the community, this growing community here at Grok Trade, and that you sign up to become a Grok student so you can become a Grok graduate with our formalized trading education through mentoring. Take care and safe trading.
This may not be you, but traders who come to Grok Trade for help are sharp, well-educated, and have made money in the past. However, they weren't executing consistently nor disciplined in managing risk. They bought high and sold low. They let small losses turn into large losses. They kept losing money. This does not have to be you. They made a change before it was too late. Grok Trade students trade within the live markets with confidence. Get signed up today before it's too late for your trading.